For this session, we will talk about internal control consideration. So we already finished before your audit planning, and we already had an idea about the whole auditing process. So now we will talk about your control environment. Now for control environment, our main issue is to understand the control. Our main issue is to understand the control. Now, in understanding the control, of course, we look into the design and then the implementation of that control. So it is not only purely that there is a control in paper, that that control must be implemented. Now, in understanding the control, we are assessing this control. So a preliminary assessment on that control. So if the auditor thinks that the control risk is high or the control risk is low based on that preliminary assessment. Now, if you still remember, this particular assessment tells you the direction of your testing or the reliance that you will use on your testing. So if the control risk is high, you go directly to substantive tests. So if the control risk is low, then you go to test of controls. Now, in your test of controls, what we test is whether the control is effective. So normally, we check the effectiveness of control. And then, that is now the reassessment process. And after that, we again rank or look into whether the control risk is high or control risk is low. If control risk is high, then do substantive testing. If control risk is low, then you still need to do substantive tests, but this is a lesser substantive test. Now, in your internal control consideration, we will only discuss the basics of internal controls, but we will not discuss the whole controls pursuant to your different business processes because that is a separate topic. And hopefully, we can finish that as we go through in this session. So let's start your internal control. So what is internal control? Internal control is the process designed, implemented, and maintained by those charged with governance, management, and other personnel to provide reasonable assurance about the achievement of an entity's objectives. So therefore, internal control provides reasonable assurance to achieve the objectives of the entity. Now, why is it reasonable assurance? Just like your audit, internal control can only have a reasonable assurance. It cannot provide absolute assurance. That is because of the limitations of your internal control. So what are the limitations of your internal control? First, management override over the internal control. Second, circumvention of internal controls due to collusion. Next, the cost benefit of your internal controls, because even if there is an internal control for a particular item, if it is too costly, then for sure it's very hard to implement. Next, most internal controls tend to be directed at routine transactions because it's very hard also to look into the different controls for a non-routinary transaction. So since it is routine transactions, you know the processes, therefore you know what controls needs to be placed. Next, the potential for human error, and then the possibility that procedures may become inadequate due to changes in conditions and compliance with procedures may deteriorate. This is because as time passes by, maybe your controls are working effectively before, but as time changes, that controls may not work already. And you need to review those controls again. Next, segregation of duties may be difficult to achieve in a smaller entity. So especially for smaller entities, we need to segregate duties. And whenever we talk about segregate duties, we look into three items. We have your custody, we have your authorization, and we have your recording. So these three items must be separated. And since it is a small entity, sometimes these three items is very hard to separate. Now, we said that internal controls gives or provides reasonable assurance to achieve the objectives. So, to what objectives are internal controls directed? So first, we have your financial reporting objective. This relates to the reliability of your financial reporting, particularly in the preparation of your financial statements. Next, the operational effectiveness objective. This objective is intended to enhance the effectiveness and efficiency of your operations, that the processes are followed and the processes that are outlined has proper controls. Next, compliance objective. This objective relates to entities' compliance with applicable laws and regulations. Now, you also implement internal controls so that laws or regulations cannot be breached. So let's classify your internal controls. Your internal controls can be classified according to objectives and according to functions. First, according to objectives. We have your financial reporting controls, operating effectiveness controls, and compliance controls. And we have discussed it earlier already. Now, since we have three types of objectives, what control is relevant to audit? So normally it is your financial reporting controls because this gives rise to your ROMM or risk of material misstatement. Other controls for other objectives may be relevant but are usually not relevant to the audit. So financial reporting controls gives rise to our OMM, but other objectives or other types of internal controls according to objectives can also be relevant as long as it is tied to your items in your FS or in your financial reporting. Now let's look into your internal controls according to functions. So we have three. We have your preventive, we have your detective, and we have your corrective controls. Now, what are the differences on these three? So first, we have your preventive controls. Your preventive controls try to deter problems before they arise. So normally, these are your segregation of duties, control to physical access, and we have your access controls. Next, we also have your detective control. So your detective control, these discover problems as they arise. So some common examples are bank recon, trial balance, and your physical count. Next, we have your corrective controls. So under corrective controls, these remedy problems discovered with detective controls. So some example are your backup copies of transactions and master files. Now, what is the relationship of these control activities? So initially, there is normally a threat, and this threat should create an a threat event. Okay, this threat should create a threat event, and this threat event will exploit any vulnerability that is present in your current operation. And ultimately, it should result to any potential impact in your system or in your operations. Now, once you have deterrent control, so this could deter potential problems, or we call this one your uh, preventive also. Once you have ear deterrent control, that now reduces the likelihood of a threat event. However, if the threat event happens, then the detective control will detect it. And then, ultimately, if ever the detective control is not enough to detect it, then there is now a vulnerability. So if there's a vulnerability, then we have your corrective control to at least minimize the impact. So generally, that is the relationship of those controls according to functions. But if we look into your IT, we don't only have preventive, detective, and corrective. We also have your compensating control, and then we have your deterrent control. So there are five controls normally, or control categories for IT, not only preventive, detective, and corrective. But the general setup is just the same. So when the threat creates a threat event, your preventive control should deter that. But if the threat event happens, then the detective control should detect that. And once the threat event exploit the vulnerability, then the corrective control should correct that. So to at least minimize the impact. To at least minimize the impact. So who has the responsibility over the control? So generally, it is the management who has the responsibility to design, implement, and maintain your internal control. As we said earlier, in understanding the control, we look into the design and implementation of this control. Now, what we need to do only as an auditor is to obtain the understanding over the design, implementation of this control. And then, if we think that the control is low, then we try to test the control. Okay? So, as an auditor, again, what is our responsibility? That is only to understand the design and implementation of your control. And based on that, we assess whether the control risk is high or control risk is low, depending on your reliance, whether you are doing control reliance approach or substantive test approach. Now, if purely substantive test approach, then do not test control, meaning your control risk now is assessed at maximum level, then you do substantive tests. But if based on your assessment, your control risk is low, then you need to test the control. And once you finish testing, then you can determine whether you will provide less substantive tests or more substantive tests, depending on the results of your test. So why again place control? Earlier, we said we place control to obtain objective of the entity, whether that is financial reporting, whether that is operating, or whether that is compliance. But you place control so that at least we minimize the impact on the entity. Now, the question is, when will you place that control? First, before an expensive part of the project, before points of no difficult return, before one phase of an operation, before there can be corrective action, before accountability for resources change. In short, before any operations, there must already be a control. Before you start an operation, there must already be a control. That is to help you deter any possible threat event or any possible vulnerability over the entity's operations or system. So what are the components of your internal control? So the components of your internal control provided before is your crime. You have your control environment, risk assessment, information reporting and communication system, monitoring, and existing control activities. Now, under PSA 315, your components is still crime. However, this crime is now divided into two items. That is whether it is a direct control component or direct control, or whether it is an indirect control. So when can we say it is direct control? If ever that is CI. Indirect control, if that is ERM. Therefore, control environment and information reporting and communication system is a direct control. However, risk assessment, monitoring, existing control activities are indirect control. So let's start first with control environment. Sorry. The control environment is the control conscience of an organization. Generally, that is thrown at the top. So whatever is set by the management, that is normally known as the control environment. So to what stage do we want that we are not impacted or there will be no vulnerability on the particular corporation, entity, or system. So that is the tone set by the management. We call that your control environment. While your risk assessment normally is the evaluation of your internal and external factors that affect your organization's performance. So we normally start here by looking into your business risks. And then we assess these risks. And then lastly, we try to manage your risk. So your risk assessment, this is the part of assess on your whole risk management. So on your risk management process, we again first identify risk identification, then we assess and then manage. Ultimately, we call this one your risk assessment process. Sometimes we also call it your risk management process. So it could be your risk assessment process or your risk management process. So we look into your internal and external factors, we assess the likelihood of those, and then we try to manage those risks. Then we have now your information reporting and communication system. This is the process which ensures that the relevant information is identified and communicated in a timely manner. So whatever information that relates to your control activities or controls must be properly communicated. So let's say, for example, even if there is already a tone at the top, if ever there is a possible vulnerability or threat event or agent, you again report that so that it could be easily deterred by the system. Aside from that, whenever we talk about reporting system, this talks about whether you are using IT or not. And the use of IT was already discussed during our midterms. Now let's look into monitoring. This is the process to determine whether internal control is adequately designed, executed, effective, and adopted. We said earlier that even if there is already an internal control, we still need to monitor that internal control because as time changes, of course, your controls may or may not be effective. Therefore, we keep on monitoring that. Although in audit, we look only on design and implementation, but the management must always monitor the control. That's part of their responsibility. Next, we have your existing control activities. These are the different policies and procedures that help ensure the actions are identified to manage risk and executed timely. So before your control activities, we have your puppies, but now we only have your parvs. So later we will discuss the difference of puppies and parvs. Let's start first with your control environment. Now, your control environment before, the mnemonic here is your champion. The mnemonic here before is your champion. However, now it is changed to ICE AA. And what is ICE AA? ICE AA is independence. You have your competence. You have your ethical values. We also have your accountability. And then we have your assignment of authority. So this is now your new control environment. Again, I'm repeating it. Before, we have your champion as the control environment. That was changed by PSA 315 recently that the control environment now contains only on 5 items. That is ICE. We have independence, competence, ethical values, accountability, and assignment of authority. Now, it is quite easier to understand because again, you are seeing or you are providing your tone at the top. So, how independent is the entity or how independent is the auditor with the entity? How competent are the individuals within the entity? what are the ethical values, how accountable are the individuals, and how do we assign the authority. So assignment of authority is just like your organizational structure and assignment of authority and responsibility, including to your policies and practices. So this is now how we manage um, your different structures, lines, authorities, planning, controlling the entity's operation. While your independence is still the same, ethical values is this already, this item. And then accountability, look into the responsibilities of your different resources or individuals. And competence also talks about whether competence is reflected on your individual's job. So ultimately, it's almost the same. However, it is now only compressed into five items. We have independence, competence, ethical values, accountability, and assignment of authority. Next item, we have your risk assessment process. Earlier, we said in your risk assessment process, what we do is we identify the risk and then we assess the risk. And once we assess the risk, we manage the risk. So what do we need to identify? We identify two types of risk. We have your entity level risk and we have your transaction level risk. So under your entity level risk, these are changes in economic, industry, regulatory, and operating conditions. So let's say, for example, just yesterday, based on the SONA of the president, pogos are now banned in the country. Therefore, we can consider that as a regulation that that risk is known as entity level risk. But if ever the risk is about a particular division, operating units, or functions of the organization, so let's say one of your organization, which is currently located in Region 2, is experiencing a typhoon. And since it is experiencing typhoon, therefore, the operations there is not conducted. So that could be considered as a transaction level risk. Now, we look into this risk and we assess the risk. We assess whether it is significant or not. If you still remember before when we talk about your planning, we already know the different significant risks. So for significant risks, it only boils down on the different five items, especially if that is a particular non-routine transaction. Okay, so let's look again on your significant risks, whether it is due to fraud, recent significant economic development on accounting, complexity of transactions, related parties, subjectivity, and if there is a significant transaction. Now, um, other conditions could be change operating environment, personnel, growth of business, technology, restructuring, etc. But as we have discussed before, audit planning, during your audit planning, you have really just few considered as significant risks. And those are first, significant non-routine transactions. You have your judgmental matters, which include estimates, revenue recognition, meaning change in accounting standard. You also have your related parties, and your going concern assumption, and then we have your fraud. So this is quite discussed already before during your audit planning, and we keep on emphasizing that during our audit strategy when we look into our considerations for the significant factors in directing the engagement team. So in directing the engagement team, we look into the significant risks. And in these significant risks, we said we only place their resources or pool of individuals with enough training because these items are not or cannot be easily audited. So only those with enough experience could audit these items. Next, we have your information and communication control. So for your information system, we have already discussed or covered this one when we had your IT. So it consists of people, data, infrastructure, software, and output. We also have your accounting information system. And then lastly, what's new here is communication. So although we have your information and reporting system, if it's not properly communicated, then still there will be a problem. We said even if there are controls that are in place in the particular business or system, if that is not known by the people or those individuals within the entity, then again, it is no help. It will not still deter the problems or threat. Therefore, it must be properly communicated. So how do we communicate it? So it is through manuals, memorandums, and you have your bulletin board messages. So it is important that you communicate whatever are the responsibilities and roles or the controls in place. Next, we have your existing control activities. Before we have your POPIs, okay, performance review, authorization, physical controls, information processing, and segregation of duties. But now under PSA 315, we only have your PARBs. We only have your PARBs. Again, performance review for letter P. We also have your authorization. We have your this is the old. So we have your PARBs. So for your PARBs, we start first with physical controls, and then we have your authorizations, we have your reconciliations, we have verification, and we have segregation of duties. Okay. So we still have this item. What's new is reconciliation and verification. So what about reconciliation? In reconciliation, you are reconciling two or more data elements. So let's say you look into reconciling your book and bank balance, reconciling your subsidiary ledgers. Also, we have your verification. Under verification, we compare items. So for example, place under your books that the total inventory is 500 pieces, then you count the inventory whether the inventory is really 500 pieces. So the existing control activities now change by placing reconciliations and verifications, but physical controls, segregation of duties, and authorizations are still placed. Now, for authorization, we have either general or specific authorization. For general authorization, this applies to routine transactions, while for non-routine, we have specific authorizations. And for segregation, we said we have custody, authorization, and recording. So this normally should be properly segregated, especially for small entities. But if not, then again, we cannot say that the control is absolute. Next, we have your monitoring. For monitoring, we now assess the quality or performance of internal control over time because we said as time passed by, internal controls that are effective before might be ineffective now. So whenever we say ongoing, these are routine monitoring activities, so continuous, based on what is placed in your organization. And also, we have separate monitoring, so these are non-routine basis. So for example, periodic review, analysis, performance indicators, operations audits, internal and external audits. Those are considered separate monitoring. Now, how do we evaluate your internal controls? First, we obtain and document your internal controls. And then we said we assess your control risk. If the control risk is high or control risk is low. If your control risk is high based on your assessment, then it means that you will now go to your substantive test. So this is your purely substantive test approach. Substantive test approach. But if your control risk is low, you perform tests of controls. And after you perform tests of controls, either you say that control risk is high or control risk is low. If control risk is low, we have less substantive tests. If the control risk is high, you have more or extensive substantive tests. That's why either from these two alone, you already can determine the nature, timing, and extent of substantive tests. But if you assess control risk low, then perform TOC, again, you can determine the nature, timing, and extent of substantive tests. Initially, take note, what we need to do is only an understanding, meaning you obtain and document your understanding of your internal control. That is the design and implementation of your control. And after that, you can assess, and upon assessment that the control risk is high, then substantive test. But if control risk is low, then you perform test of controls. Next, we need to understand how do we obtain and document understanding of your control structure. So the goal here is to obtain an understanding of your client's internal control. So you have to identify only those related to your financial reporting objective. Take note, only identify internal controls that are related to your financial reporting objective because we are doing a financial audit. Therefore, only controls relating to financial reporting objective will be understood and tested. So you identify types of potential misstatements and identify the factors that affect the trees of material misstatement, and you can now design the nature, timing, and extent of your further audit procedures. So how do we obtain and document understanding of the control structure? So we do audit procedures such as your pre-performance and IOI. So for your IOI, we have your inquiry, observation, and inspection. That is known your audit trifecta. We said during your audit planning that these particular audit procedures are done throughout the whole process of audit. So even in your planning, in your control, we still do that. And particularly in substantive tests. What's new here is the performance. You try to perform whatever is the policy or procedure laid out. Because normally, internal controls are particular policies and procedures of the entity. So you perform whether those policies and procedures are really working effectively. Now, how do we test the controls? We test the controls per transaction cycles. So we look the different policies or procedures per transaction cycles. We have your revenue, acquisition, and we have your payroll. So for revenue cycle, we again look into the whole process, and based on the process, we look into the internal controls in place or what controls should be in place. We test the control and we perform substantive tests in case. Just like in acquisition cycle and payroll cycle, we need to understand the whole cycle. So we will have a separate topic on these different transaction type cycles, and we will discuss them one by one. We look into the internal controls per cycle, and we look into how do we test those controls. And then lastly, we need to document our understanding of the control structure. But the question is, how do we document? You document using a narrative, internal control questionnaire, flowcharting, or walkthrough. So whenever you do a narrative, it is the origin of the document, the processes, how do you dispose the document, and indication of possible related controls. So as we go through your different business cycles, you will understand this narrative by looking into what documents are needed in a particular cycle, how that document flows through that cycle, how do we dispose those documents, and ultimately, what are the internal controls out of that business documents and different departments related on that cycle. So again, we look into the documents in that particular cycle. Also, based on that documents, what departments that particular document will flow into, and what are the internal controls that should be placed on those documents and the department that is handling that particular document. So that is how we do our narrative. And if ever you think that the internal control is placed or not, you just indicate therein. Also, we have your internal control questionnaires. This is a series of questions relating to possible internal controls that should have been placed into the organization. And then you just check or cross it out depending whether it is applicable or not on the entity. We can also flowchart the whole process and we can do a walkthrough by understanding the whole organization and the system in place. Now, assessing control risk. So, after we understand, we need to assess the control risk, whether it is at maximum or less than maximum. So, when can we say that we can place a maximum level of control risk? If controls do not pertain to an assertion, so there's an assertion and there's no control to it. Controls pertain to it, but it is ineffective. And then evaluating on the effectiveness of relevant controls would be inefficient, such that, let's say, the total transactions of the entity is so small, then do not do tests of controls. Then just do substantive testing. But if that is less than maximum, then we say that the internal controls are effective. Now, if it is maximum, no need for TOC, you go now to substantive test. But if ever less than the maximum, then you perform TOC. Again, we call this one your control reliance approach. This is known as purely substantive approach, or also known as no control reliance. No control reliance. So if you want to rely on your control, then you need to test the control and say that the control is working effectively. But if you don't want to rely on control, then you go and do substantive testing. Now, we perform TOCs. To perform the TOC, again, we need to understand the whole process and look into the possible controls in place, and then we test the control. And what are the procedures? We have your inquiry, observation, and then inspection, as we said earlier. These three are known as your audit trifecta. Why is it known as audit trifecta? Because in all stages of the audit, we do it. So let's say risk assessment process, we do it. Test of controls, we do it. Substantive tests, we do it. So even in you're completing the audit, we do it. So test of controls, substantive tests, completing, we do it. And then what's new here in your test of control is rep performance. Again, we perform the policies or procedures. And then we also communicate with those charged with governance. What we only communicate are the different material weaknesses. We call these material weaknesses as deficiencies. Okay? We call these material weaknesses as deficiency, also known as reportable conditions. This must be communicated through a management letter. This must be communicated with the management through a management letter. Now, how do we document the controls? Now, if your control risk is high, then the understanding must be documented. The risk assessment must be documented, but the basis for risk assessment should not be documented. But if the control risk is low, the understanding must be documented. The risk assessment must be documented, and the basis for risk assessment should be documented. So you already know the whole process of test of controls. Initially, we just understand, we look into risk assessment and your basis for that risk assessment. If you uh, if you think that the control risk is high, or based on your assessment, you see that the control risk is high, you only need to document your understanding and your risk assessment. But the basis must not be documented. But if your control risk is assessed at low, the understanding, the risk assessment, and the basis for the risk assessment should be documented. Okay? So that's it for your internal controls.